All right, let's talk about AerCap. They're the biggest aircraft leasing company in the world, and honestly, they've just given us a real head-scratcher. See their latest earnings report? It was a record breaker, absolutely huge. But the market's reaction? Well, it was nervous, to put it mildly. So what on earth is going on here?
So check this out. In 2025, AerCap pulls in a massive $3.8 billion in net income. We're talking their best year ever. But then, when they announced their forecast for 2026, the stock actually dropped. So you have record profits, followed by a sell-off. How does that even make sense?
So what is the real story behind these numbers? You gotta ask, was this incredible performance just a one-time fluke? Or is the market missing something much, much bigger? That's exactly what we're gonna unpack right now.
To solve this puzzle, we've got to start by taking apart that spectacular 2025. The headline numbers, they look amazing, but the real clues are kind of hidden inside. Okay, first, just look at the sheer amount of activity. In 2025, AerCap sold a record $3.9 billion worth of airplanes.
And to get that done, they completed 705 separate transactions. Just think about that. That's almost 2 major deals closing every single day of the year. It's wild.
And the result of all that hustle? A record $2.6 billion was returned to shareholders. I mean, by any standard you can think of, 2025 was an absolute blockbuster year for them.
But, and this is the really crucial question, was all this money generated by their normal, day-to-day business of just, leasing planes? Or was there something else going on under the hood?
And boom, right here is our first huge clue. If you look at their income statement, you see the official number, the GAAP net income, $3.8 billion. But then you see this line item. $1.5 billion came from a one-time insurance payout for planes that were stuck in Russia. Now, that's a massive injection of cash for sure, but it's got nothing to do with their regular business. Now, the second clue means we need to get our heads around a term called gain on sale. It sounds complicated, but it's really not. Think of it like this. You sell your house for more than you originally paid for it. That profit? That's your gain on sale. For AerCap, it's just the profit they make when they sell a plane for more than it's worth on their accounting books.
And there it is, our second clue. In 2025, AerCap didn't just sell a ton of planes, they sold them at an incredible profit, a 27% margin. This was another totally extraordinary event, and it was all because the market for used aircraft was red hot. So we've got 2 big, unusual boosts to their 2025 numbers. But wait, why was the market for used planes so hot in the first place? To get that, we have to zoom out from AerCap's balance sheet and look at the entire aviation industry, because right now, there's a massive structural shift happening.
This quote from AerCap's own CEO, Angus Kelly, just nails the problem. He says, "Production surprises to the upside simply do not occur." Basically, building new planes is incredibly hard, and guys like Boeing and Airbus just can't make them fast enough to keep up with demand. They're constantly dealing with delays and production problems.
So here's the bottom line. You have people all over the world wanting to travel again, but the supply of brand new planes is stuck. This creates what the CEO calls a structural shortage of aircraft that he thinks is going to last for the rest of this decade. And think about it. When you can't get a new plane, what do? You hang on to your old one, or you go out and buy a used one.
Okay, so now we get it. We've got these big one-off boosts in 2025 and a massive aircraft shortage across the whole industry. With all that context, we can finally go back and solve our original mystery, decoding that 2026 forecast that totally spooked investors.
So the market saw that headline number for 2026 and kind of hit the panic button. But here's the thing. AerCap's own CFO basically explained that the dip wasn't a sign of weakness at all. It was actually a sign of really conservative, transparent forecasting. The smart money was reading the fine print.
In fact, the CFO laid it all out for us step by step. Let's just walk through it together. They start with those awesome 2025 earnings. Then, and this is the absolute key, they subtract those huge exceptional gains from selling planes that we just talked about. After a couple of other small one-off adjustments, they add back the growth they expect from their actual core business. And voila, that's how you land on the 2026 forecast.
So, the mystery is solved. That 2026 forecast looks lower because management, very wisely and transparently, decided not to bank on those massive, non-repeatable gains from 2025. What's left is a picture of a really healthy and, importantly, growing core business.
So, what's the big takeaway from all this?
What does the AerCap story really tell us about where aviation is headed? Well, it all comes down to a fundamental shift in what makes an airplane valuable.
See, with brand new planes delayed for years and years, the most valuable aircraft in the world isn't some futuristic model. No, it's the one that's sitting on the tarmac, ready to fly passengers today. This makes the existing global fleet of planes incredibly valuable assets.
This right here, this is the new reality. These supply shortages are going to be the new normal. Airlines are paying more and more to keep their older planes flying longer. And that gives companies like AerCap, who literally own thousands of these now precious assets, a ton of leverage and pricing power.
So, I'll leave you with this question to chew on. In a world where new planes are always late, who really holds the power? The companies that build the planes or the companies that own them?